Industrial average and the S&P 500 had their worst week in 2 years last week. Adding to investors' jitters, the Dow average experienced two drops of more than 1,000 points and two rallies of 300 points last week. Overall, the Dow and the S&P both closed down 5.2% for the week. What happens tomorrow? Well, we've got Pete Najarian, along with his brother John, is a regular contributor to CNBC's Fast Money. You may also remember him as a former Minnesota Gopher and Viking and also a football analyst. But we're here to talk about the stock market and the markets.
It's more exciting than football, actually.
Well, it is more dramatic. Pete Najarian, thank you so much for coming in. We had you on a few months ago, and you said, basically, you said this is going to go down at some point.
Right.
Did you expect exactly this?
You know, given the fact that we continued to rise even higher, we went, I looked back from when I was on with you, and in late September, we went up 4,000 points on the Dow, we went 400 points on the S&P, and now we've pulled back finally. So you never know when these pullbacks are going to come. You never know when you're going to see the correction. But a few elements absolutely tipped us off over the last week or so that made it seem like, you know what, this actually made some sense. You had inflation concerns starting to come into the marketplace. Folks, when they started seeing the algorithms start to really jump on things, and what I mean by that is computerized trading. When these computers that are the algorithm is to pick up on that momentum, it's unbelievable, and you saw it on multiple days where we were down 1,000 points. We also had multiple days where we may have finished up, but we were down during the day, so we'd reversed 700 points or 800 points or 900 points. So it's the air pocket sort of a market that we're in right now. Volatility is here, but volatility normally does not last at this level for longer than about a 2-week stretch. Maybe 3 weeks.
So another week then?
So we got another week potentially.
Really? You think it'll be this volatile for going into next week?
I would think that we're going to see the volatility right now is, we'll call it 30. That means we're going to get a 2% move every single day. Now, I don't think that can ever, and in the past at least, it hasn't ever extended past a specific time frame. So that's why I'm feeling pretty comfortable about the idea that, are we going to be at 30 and maybe jump up to 40? Sure. Could we fall back to 20? Absolutely, on the volatility index. But I think overall, we'll start to see this after a week or so more. We'll start to see this sort of settle back down, and then we'll start to feel like we can actually trade the markets that we know.
You mentioned the impact of computerized trading. There are breakers in place, though, that stop, but those are based on percentages, aren't they?
Yes,
okay,
absolutely.
Explain that, because I think a lot of people are looking at this and going, oh my gosh, this is just going to, the bottom is going to fall out.
Sure, there are certain percentages where they absolutely, there is a pause mechanism that's built into the marketplace. And, you know, it's on the ups and the downs, but, you know, the downs are what everybody's always the most concerned about. So we're always watching these kind of things, and you know, it's sort of safety measures that they're trying to put in. It's like putting in a speed bump, actually, in the, you know, in the garage as you're trying to get out. You don't want to get out too fast. Well, it's the same thing with the stock market. We have speed bumps out there where we will have pauses along the way.
What would you say to the more modest investor or somebody who has a 401k?
Yeah, I would say stay the course. If you don't like a Pete Najarian style, which I'm more of a trader, but I'm also an investor, listen to Warren Buffett. He looks for opportunities like this to put more money into the market, because you're getting the market at a discount from where it was, and if you're in for the long haul, more than likely we're going to see the markets continue to go up. If you like Warren Buffett's style, that's exactly what you want to follow.
All right. Is there any one sector that's doing especially poorly right now or especially well amidst all this volatility of last week?
You know, pretty much the carnage hit everything. But for the most part, you know, one of the things that I said just last Friday, Jim Cramer was in town for the Super Bowl, huge Eagles fan, and we were doing our show at noon over at the stadium, and then Jim's show followed. Well, he asked us to come back down. He asked the exact same question. He goes, "What do you?" Except for he phrased it this way: "What do you think is under the most vulnerable over this next week?" And I said the industrials. And the reason I said that was, when you look at Boeing, you look at United Technology, when you look at a lot of those names in that category, they had been going straight up at an absolutely meteoric type rise. Well, that shouldn't happen. And when you trade well beyond where you normally trade in terms of price versus earnings, it's time to look for those things to kind of maybe give you a little bit of a pullback, and that's what the industrials did last week.
Well, Pete Najarian, thank you so much. We want to let everyone know that Pete has graciously agreed to continue this conversation on Facebook Live immediately after the show at 11 a.m. Now, if you want to be part of this conversation, just go to the WCCO TV page on Facebook, like it, and you can join us live again at 11 a.m. So we'll see you in just a few minutes.
I look forward to it. It'll be fun.
Thank you, Pete.